Welcome to another session of Warlords of Wall Street. Today was a good day for us in the market. You know, the our position where we came in just the other day at 785 on DPST, with it breaking $9 today was very pleasant. We continue to see strengthening in the regional banks. I think that that's going to be a very healthy thing. I believe that the KRE is something that everyone should probably take a little taste of, and I would sit on it for the better part of a year. I think that there's probably a 50% profit in it, give or take. And if you have the courage of a lion, as we do, the direction triple leveraged version of the KRE, symbol DPST, is something that we've been playing, and it's been yo-yoing quite nicely for us. And once again, we've made close to another 15% on our play with that. Couldn't be happier about it. A couple of the big stories that led the news in particular today happened to benefit our portfolio very nicely. As you all know, we have a fairly large position in Tesla. We've got a large position in Google. We've got a large position in Meta. And today, Tesla's debt being upgraded by Moody's, very pleasant surprise. We knew that it was in the works, but frankly, I just didn't think that they had made enough improvement to get a significant upgrade. But apparently, the folks over at Moody's are a little less conservative than I am. That ended up, we saw the stock jump about $15 a share today. Very nice. Our portfolio certainly appreciated it. The Morgan Stanley came out with nothing but glowing reviews of what Meta is doing over there. They also seem to be very excited about the prospects of Reels, which is a competitor of TikTok. Certainly would benefit very nicely if the federal government here continues on its path to ban TikTok. I understand that the youth would be upset. But I, having been one that doesn't spend any time on TikTok, only looks at it from the geopolitical point of view. And this is a Chinese, I think, a Trojan horse of sorts, and that it is getting an awful lot of information and able to put an awful lot of content into some impressionable young people's minds, and that is dangerous. And some would maybe say, it's hyperbole. The Chinese aren't our enemies. Well, the truth be told is that the Chinese people are not our enemies, much like the Iranian people aren't our enemies. Philosophical differences be what they may, but the reality is that their governments are our enemy. And make no bones about it, the Chinese government is not our friend, and they are engaged in espionage at the highest level every day, as are the Russians, as are the Iranians, as are the North Koreans. The fact of the matter is that we really do have issues with 3 or 4 nations out there, and they are not, that they are our enemies. And the moment that you don't take China serious about what its goals and aspirations are to hold its seat at the table and perhaps even one day be recognized as the leading geopolitical power on earth, and they have the people, and they have the desire to be that, they were asleep for a very long time over there. The way the world was closed off to them all the way through the 70s, and what they have done to catch up at this point is nothing less than impressive. And that is something that you need to be very careful about. So if TikTok gets banned, I personally think it's a good idea. Coming back with Morgan Stanley being excited about what Meta and its Reels division can do, we certainly liked what we saw with Meta. The positive commentary for them certainly helped our stock go up there a little bit today. But no one can avoid the 800-pound gorilla in the room, and that is the Federal Reserve. Tomorrow is the day that Powell takes the lectern. He's probably going to tell us, as we've been saying for quite some time now, is that they're going to go ahead, bump rates one more time, 25 basis points. I think beyond the interest rate bump, I think it's going to be parsing his language is going to end up being very important. I personally think that he's going to be telling us that the systemic risk to the banks is overblown, that they are committed, as is the government, to making sure that this doesn't end up becoming a runaway train of any sort, that they are there to make sure that these problems with but a certain amount of the banks are just that. They are isolated and they are going to be, absorbed by other banks. They will do what they'll have to do because, as I've mentioned a couple of times over the last week or two, the very bedrock of Wall Street, the very bedrock of the financial world is built on our financial institutions here. And even with something like Credit Suisse the other day and United Bank Switzerland coming in, that was a ripple effect from what was going on over here. It just, although Credit Suisse has been challenged for a very long time and has gone through an awful lot of management trying to regain its cachet, its day finally came to an end, and UBS, a much better bank and has always been a much better bank in my opinion, ended up getting the deal of a lifetime by paying $3 billion for it, but it goes away. I think the same thing ends up becoming a lesson to be learned here. And I think that's exactly what the U.S. regulators are going to take a look at. If there is, like Republic or others like them that are super regionals and what have you, that continue to struggle financially, you're going to just watch some of the big banks come in, scoop them up, pick their bones, and they'll just go away. And a little blood on the floor every now and then is not a bad thing. It forces everybody to take a look at their books. It forces everybody to take a look at their business practices and tighten up. There's nothing wrong with tightening up. And the banks have gotten a little greedy because now that they've essentially been merged with investment banking firms for decades and decades, you couldn't be a Merrill Lynch and go in and buy a commercial bank. But when we ended up having the crisis back in 08, 09, Lehman and others failed, the government made the decision that it would allow the major commercial banks to come in and pick them up. So now you've got Bank of America owning Merrill Lynch, which also owns Schwab, which also owns TD Ameritrade. And so you've got an awful lot of vertical integration between checking accounts, investment accounts. There isn't anything that these guys can't do, from writing options contracts and what have you. And now all of a sudden you've got investment bankers sitting at the table with commercial bankers, and they are two very different animals. So we're seeing a lot more aggressive risk taking in the commercial banking portfolios, and this is directly attributable to the presence of investment bankers in the room. So I think it's a good lesson to be wary of, is that sometimes you can't go too far. Powell's commentary, I'm very interested to see what it's going to be like tomorrow. I don't doubt that he'll be beating the drum of how they're on top of things. Things aren't necessarily as bad as people think. The government is here to do whatever it's got to do, and I think it's absolutely necessary that they go ahead and they calm the fears. The 25 basis point bump essentially says that we're not so worried about the banking situation. We spoke of that yesterday. If they weren't going to raise anything, I think that would send a very bad signal to the market that there are bigger problems out there, and they recognize that it's their extraordinary decision to raise rates as aggressively as they have over the last year because they waited 6 months or 8 months too long to actually begin this process. But if they now that they are here, a quarter of a point basically says that the market is in pretty good shape. I am still hopeful, and it looks like for a variety of reasons we may end up being proven right yet again, that we're going to see maybe another 25 basis points after this. I'm thinking maybe not, I don't know if we're going to see another rate bump. I think perhaps they're going to just sit on their hands for a month or two, read the data, and if they need another quarter of a point, they can always bring it. But now's the time to sit on their hands, see what's going to happen, and if anything, I'm believing that we might actually see a quarter of a point drop. Them pulling that back in the fourth quarter of this particular year, and that is what we've been hoping for and advocating for some time now. They've done plenty of damage with their hammer, and the banks are a perfect example of that. So, I, like you, will be tuned in to see what Powell has to say tomorrow. Good luck with that. Be careful. Take your profits where you can. Keep your powder dry. There's going to be deals all over the place here pretty soon. Good luck in the market. We'll see you tomorrow.